Morning, everyone. Welcome to another great day for trading. Had a great day yesterday, and let's hope that things carry on today. We've had a nice gap open, gap down below the 1900. 10 ergs. We're looking for sharp angles on the ergs, the biases, nice sharp attack crosses. Just before we get into our session much, just to remind everyone of the disclaimer at the top of our screen, essentially saying that none of us hold ourselves out to be commodity trading advisors, and we're here for educational purposes, informational purposes. The trading ladder on the side is simulated mode. It is for educational purposes, and Avenge does not trade any funds for any individual. We do not tell people when to trade, but we do give analysis of the charts we have, and from that people can make their own trading decisions. We do a tracking, simulated tracking of the software, and those are the trades that we are talking about today. So I'm here with Darren, Graydon, and Brandon. I think we'll be on and out throughout the session today, and offering commentary and thoughts, and it should be fun. So we are right now 1888, bottom of the morning actually, 660,000 contracts traded. Larger charts, nothing to consider in terms of ergs. Nice BC bias, one ergs coming down, turning into this, although the V and the tick, volume and the tick are turning up. So we may be, just as we came on, we had a nice push down through our low morning, and we may be bouncing up off this temporarily. So let's see how this responds from here. We could move back up near the 1900.
Morning, guys.
Hey, good morning.
How you doing this morning?
Good. I just had a comment here from someone wondering why we were down so much here this morning. I think it's because of oil. The price of oil was down, and that's the big reason why we had our gap down here this morning. Good to hear you here, Graydon.
Great to be here. Very excited for today. So this morning we'll be spent talking about more about analysis. Usually what happens with the Avenge webinar is that we will run through the different setups that come throughout the entire 2-hour session. However, today is a special analytics session. So today will be spent looking at various filters and patterns that might be seen by us, as well as if you guys see anything that's different, you guys are more than welcome to throw any patterns and trends at us through the comments section. And so we'll be evaluating other filters as well as just evaluating other patterns and trends that we don't normally take a look at during the normal 2-hour event.
Unmuted.
So that is what today will be looking like. Myself, as well as Brandon and Darren and Greg, we will be countering each other and all offering different perspectives and opinions, and hopefully it'll be a very interesting and intriguing day to see all these different backgrounds and opinions. So get ready for an analytics session is what today is.
I'm looking forward to it here. We S&P, we always talk about the S&P coming near the 1900. The actual S&P is around 1894 and a half. So it's trading about 3.5 points ahead of where we are. So we're beneath it nicely. We talk about the magnet theory. That's sort of something we've come up here with ourselves, a terminology, about how sometimes the market seems to gravitate towards the 1900, 2000, 2100, becomes a little more chaotic during that time. So that may play into our whole analysis as well, in terms of some of the things that we see. Maybe less opportunity today than what we had yesterday. We had a lot of opportunities that came in, but let's just watch this and see how things emerge as we go. See a D spiking up with the C bias. Again, everything is based there. Everything we talk about here is based around nice angles in the ergodics, nice angle in the bias, and of course, nice, crisp, sharp attack crosses. And there can be trading opportunities when those are moving and changing and maybe not as crisp and sharp. We've just shot up here with that. The D was there momentarily. The C has come in very nice here.
Yeah,
don't have anything on the ergodics at the moment.
Yeah, that really was. Saw a slight H attack there, slightest of H attacks, but it did cross, and of course that C, as you mentioned, was up. Not much more to speak of apart from that. There was a little bit of an earlier sign of those 5 minutes both turning, but then that backed off, and we did have some momentum that moved us through that I guess it is 92.50 level, as Greg, you and I believe it's been said a couple of times, just the magnet effect of the 1900, I think, will have some impact here now that we're within 10 or so points of that. So we'll just need to watch for that. And of course, some of the approaches, some of the strategies may be muted or impacted by that, but nonetheless, we'll look for those approaches. Some of the, I guess, new parameters, new, relatively speaking to the history of things, but new parameters that we've been looking at over the last while. One of the major ones is just really, in a sense, foregoing the appearance of the arrows on the 317 or 144 price chart for entry consideration in a particular setup. And that's happened, I think, in large part because the market, not only is it, the ladder, not only is it thin, but there's been just a lot of quick activity, and sometimes the market has moved in what looks to be a clearly defined pattern. See some 5-component volume tick DEF now moving downward, but at that trend line point of support there on potential resistance and bounce. But not only that, but just the fact that it's just moving very quickly, even with the thin ladder, and some of the activity is already worked into the market by the time we do see the signal populate, and that's just the function of the algorithms having to take the data in a historical fashion, even on a short time frame, and analyze that and plot it out on the charts. Sometimes we've seen, even in the very short time frames or short tick time frames, that we've got a 2 odd point candlestick, and that's actually one of the very interesting new things that we've seen happen in the last, well, number of months at any rate, but certainly in the last number of weeks, where that kind of breadth of movement can happen in even a very short time frame. So seeing the setup pattern come in that you're looking for, and then acting on that, absence a signal or with a signal, has been one of those key filters or additions or modifications. Of course, we've been looking at the attack charts a little bit more close in terms of just appearance of momentum. We just had the J attack separate there momentarily. and seeing the volume, the tick, the K, and previously the J, and the 1 minute's turning did move us right up to this 93.50, and it may move us through here.
Good morning, everyone.
Morning, Brendan. Is there
Just
something
want
that
to
you're
comment really
seeing?
quickly. Since the market opened, I've been watching the G attack to see when it crosses green. Every other chart we have on a larger scale has been also indicating a push upwards. The H attack crossed green a few moments ago. The 5s have now just turned green. The 10s are green. The A is turning up. The B is up. C is up. 3s are gaining angle upwards. Everything we have right now is starting to indicate a push upwards. The G is just touching on its. The two lines are touching just now. Once those push through, watch what happens when the market has that indication fully developed. For now, we have the J attack coming towards each other for a red cross. The scalps are showing some red pressure. They're finishing their green cycle. So at the very moment, we have a short-term red push that's developing in right now as the J is crossing. And once those G attack lines are no longer on top of each other and complete a green cross, we'll see what happens when the market starts moving upwards. If it does. This is, again, Graydon had mentioned just a moment ago that this is going to be a session oriented more towards talking about what could happen and why, and what we think as moderators when we're looking at the trends of the market and direction of the market and what different aspects of the charts we look at for our information. I've talked a few times about how I enjoy looking at the attack charts, about how you can look at the volume of buyers versus sellers and the exact moment when they cross to look at shift from buyers to sellers or sellers to buyers. And of course, our bias charts are very good at indicating when we have a future cross or a future shift. The attack charts are very good at identifying exactly when that shift happens. Now you'll notice the C bias actually has gained a lot of strength downward, and the 3s are starting to complete a downward cycle as well. The I attack is about to show a red shift in the course of the next 3 minutes into the future of a downward trend. Now that could be a stronger trend, and it could show to develop within the next 5 minutes and the 10 minutes into the future that this actually is not going to push upwards just yet, but again, something to watch and see if that 3-minute trend will cascade into the 5 minutes into the 10 minutes. Also, today will be very oriented towards educational purposes. If you have any questions, today is the day to ask them. Don't worry, no question is too simple or too complicated to ask. If you're thinking it, someone else most likely is thinking it as well. Please ask in the question box. If it's something that we can respond to individually, we will do so and message you back through the webinar chat system. If not, we will answer it in front of or answer it live so that all attending can hear the answer to the question that has been asked. But for now, we're going to be talking about the charts and what we think is going to happen. Not necessarily taking trades, but more just talking about the potential for movement right now.
Do have potentially a 6 scalp pattern coming in downward with the K separating. And to see, well, we do have 6 scalp right now at the 90.50. So this is one of those scenarios where all those are coming in. This could end up having enough energy to push through. 1s are at the bottom, guys, but DEF, volume tick, all angled down. And this could either be a bounce off of this here with a turn in the 1s. See that K attack starting to come in green, which holds off a little bit of, and see the volume just changed on the appearance of that K attack. L attack coming in behind that. So that was a bounce off there. What sort of led toward thinking about that, as opposed to the 6 scalp component downward, was just where the 1 minutes were in their cycle. And ultimately, once that K attack started patterning toward green, there was a bounce there. Now, does it mean that this could not come right back down again? We've often seen the market bounce off these support and resistance levels. Of course, we have lost all 6 of those components. That's another thing that we've been looking at, is 5 or 6 components in the scalp patterns. One volume tick, DEF, there's the K, there's the L, there's even the J that we're looking at now as well as part of the overall attack view of things. Do have, just at the moment, nothing seems to be there unless, guys, something comes in and you want me to just sort of demonstrate that on the ladder, just shout it out. But there's a question in relation to the arrows. I was talking about that before, and the question really just involves, do you think there's going to be a time when they'll be accurate and or timely again? And it's not so much that they're not accurate and not timely. They're in fact calculated in the same manner that they've always been calculated, but the market itself has changed, and it's, for lack of a better explanation, it's just faster. And with the thinner ladder, the moves that happen are just a lot faster. Whereas it used to be, you know, on a candlestick plotting of the 317, you might have had a 3 or 4 tick breadth in that candlestick. Now sometimes it's not surprising to have a 2-point breadth in that candlestick. And so the nature of the plotting is that the candlestick itself has to be completed. So in the case of the 317 tick chart, 317 trades need to occur before that candlestick will be plotted. And when that candlestick is plotted and the parameters are correct, it'll also plot an arrow as it's moved now to the next position to begin populating the information for the next candlestick. But if that candlestick that's been plotted is 2.5 points of breadth, then the market's advanced already in the course of that plotting by 2.5 points by the time you see the appearance of that arrow, versus, you know, previously it might have been a point of movement. So do you think there's a time when it will come back to what it was before in terms of the parameters of it? It's quite possible. The market or the ladder went very thin from what it was, you know, very thick before, and certainly the reverse can happen. But you know, being able to obviously predict that is not within, you know, our ability or knowledge, you know, skill set. I mean, the market is what the market is, and we have to make adjustments, and that's what we've been endeavoring to do. And one of those adjustments is looking at the setups sometimes without arrows if they don't come in in a timely manner, and say timely with, you know, quotes around it, because they do populate in the very same parameters that they've always done. It's just that the market conditions have changed around them. So moving with the times, as it were.
The arrows is also something that we can learn. We can learn not to rely on them. It was actually, we're coming right down to this point of resistance. See if we actually push through this time.
J attack separation, I attack red, threes turning point. Actually, only half of the threes, bottom threes turning green, but the C bias is developed in very sharply. Cascade of information going towards the left. B bias is now developed red as well. B bias was angled upwards before we were watching the trend of the G attack crossing, which is now uncrossed itself just a bit. It was just about to be crossing very close to it, and it backed off. So definitely some short-term red pressure.
J attack was about to spike as well, Brandon. I was watching that as right as you were speaking about the other attack charts. I was watching the J, and momentarily it was spiking, and then it backed off right about the same time that the G attack backed off.
Bigger picture, there's not a whole lot of clarity in the bigger ergodics, and oftentimes, you know, we have been talking about the attack charts a lot recently, and they seem to have a lot of efficacy. We do want to see, just for a little more strength in that, some other clarity around it with ergodics and or biases and or both. And even in the smaller charts, they're right now presently just very very skewed.
The last plot, ABC, came in even stronger.
Interesting. 5s turned up, 10s both went green.
I is starting to cross a little more on the red side.
Went down a couple of ticks, right to that 90 support level, now a little bit further. And in retrospect, we did see the A and the B angle down a bit more, as you mentioned, Greg, and now the J separating.
It was a kind of, I almost told you to throw a trade on there, Darren. It was right at the point of resistance, just seeing those biases come in right at that very last moment. But again, we didn't have any arrows come in on the 144 or 317, didn't have any strong ergodics to consider for what we would have had for our past setups. And just to add to everything you mentioned about the arrows, Darren, it was a tough decision to take that away as one of our trading components. We've relied on the arrow for so long to help us enter trades.
C-bias just replotted very strongly angled the opposite direction. A moment ago it was 45 degrees down, now it is 45 degrees up. Also note that the 5s are still angled upwards and in fact have gained a little bit of strength even though the B-bias has completely developed in downwards. This is an indication that we are short-term still pushing downward, but in the long term we're looking at an upward trend potentially as the 5s are staying there and the G is coming back in potentially for a green cross. And when I say green cross, I do mean that the green line on the G attack chart, which is in the bottom left corner of the software, representing the buyer's volume on the market, will be overtaking the red line representing the seller's volume, or people purchasing contracts to go downwards or to trade short. And when the green line overtakes the red line and comes out on top, then the buyers will be claiming a shift in the market for power. And there will be more buyers than there are sellers projected 10 minutes into the future. When that specific trend shifts, then that's often associated with a good push in the market. So we watch all the attack charts for this exact shift. The bias charts indicate that a future shift is going to be coming, just like the C bias is predicting in the next 3 minutes or so, there should be a somewhat of a push upwards. So keep an eye on the G attack. It's now even coming closer together. Of course, a moment ago, it also was close together and did not cross, so we want to be sure that it actually does complete a full cross before we take that for any information.
In terms of our original setups, very close to a 5C, bottom 5 erg isn't quite 45 degrees. Certainly with the volume E supporting this, F coming up near green.
Just had these ones turn, supporting this this 5C, almost 5C. However, the ones do not have angle. Yeah, it is nice to see that they are turning green in support with this this trend, this overall fashion that we're moving upwards here, potentially moving up at least.
It's interesting to see, especially with some very strong biases, and of course we're seeing that develop here now, at least in the A and the B, up until a minute ago with the C. But sometimes, we've often talked about it, that just provides the overall sentiment of the market at the current time. So even though you may have some very strong ergodics in the other direction, if those biases, the overall sentiment is opposite to that, is red, whatever upward moves will be muted to some degree. There will be an overall downward, essentially downward trend, though it may not be a steeply angled channel or trend, but oftentimes very strong coordinated biases will just tend to define the flavor of the market. And particularly if those ergodics can move in that direction, then that can really be some very clear opportunities in that particular direction. One thing I wanted to mention there before we talked about, Brandon in particular, that talked about the I attack and the J attack separating there on the break of that 90-50, but in terms of other agreeable pieces of information, there wasn't a whole lot there. And not that that not that that disqualified that particular possibility of a move from consideration. Go ahead.
EK spiking in with that A and B. It's not one of our traditional setups. Well, I guess the EK came back off. It was attacking the bottom of our morning. If we break this bottom, we could be in for a bigger drop here. So just keep our eye on this.
Yeah.
Keep your eye also on the J attack. Usually we see the J attack cross approximately every 2 to 3 minutes, just as in the natural course of the scalps taking a sine wave pattern. The J hasn't crossed in about 5 to 10 minutes, and that's actually somewhat unusual. It's come close a few times, but still the sellers have remained on top of the buyers for, well, just as I talked about it, the J crossed green. So there's the beginning of an upward push. Some of our other scalps are also showing that push being green. 1's volumes tick. F is there, L is there, K crossed green as well. C has developed an even stronger upwards, so good to note that the charts look like short term there may be another push up. Also, a question that came in about the nature of the attack charts. The attack charts show volume of trading projected into the future. Keep in mind that we have the intervals of the windows. We have the 10-minute column with the 10 ergs and the 5-minute column with 5 ergs and so on and so forth. And in each column, the bias in the attack chart also corresponds to the same time interval projected into the future. So the B bias corresponds to 5 minutes into the future. The H attack, which is mysteriously missing its label again, I was informed by our tech team that they had fixed that. Actually, I saw it yesterday after the session. That was fixed, and they seem to be having technical difficulties with the Avenge software and keeping labels. But it is worth noting that the charts show volume as well as show power of buyers versus sellers. So the closer to the bottom of the chart that the lines go, the less volume there is of buyers and sellers that are trading at that given moment and projected into the time interval of the future. So if you look at the I attack, how it's steadily decreasing for whatever reason right now, projected 3 minutes into the future, the market will be moving a little bit slower than it has the first portion of the morning, just because there are less people making trades at the moment. If you look at the K attack, very recently we had a spike upwards of the number of people who were trading buy contracts, especially as the green line went to the top of the chart and came back. And there was a shortage of people trading sell contracts as that line went towards the bottom of the K-TAC chart. So another thing to keep an eye on, it doesn't necessarily affect the information you use for a trade. It just gives you an indication of what the volume is at any given moment and what it is projected into the future as well. Tells you how fast the market can be expected to be moving while you're in your trade. Some people might use that information to stay out of a trade, because if you've ever been in a slow trade and you've had to wait 10 minutes or 20 minutes even for your trade to kick in because you're, let's say, waiting for the fives to apply, and because the market's moving so slowly, the 5-minute trend that would normally kick in 5 minutes, maybe it would take 10 minutes or even 15 minutes to kick in, so to speak, or for that trend to be displayed and become valid on the charts. I can tell you from personal experience, the longest I've waited on a trade was 42 minutes on a very slow moving day. Actually, it was a few weeks ago that I had that trade, and it was a very painful, very painstaking trade to be involved in. If you've ever been in a trade and held it for a very long time and been unsure of the market direction, it's not a pleasurable experience. I'd rather go to Disneyland or something. But something to consider if you're not the kind of person who enjoys staying in for a longer term trade. You probably would want to see the volume of the market somewhere around the mid-range, if not better.
So right here's your H attack separating here with the one volume tick, volume EK all together, testing this 90-50, and there could be some energy or effort here to break through that. level. See that G coming? Oh,
There's a spike.
there's, my goodness. Just as that chart's all changed in the G and the H, it actually spiked up. I was about to consider entering there just with those spikes coming in and the one volume EK spiking up, and it was already gone.
And again, that's going back to the arrows. That's a big difference from what we used to see back a couple of years ago as well. It wouldn't have 2-point spike up like that. It'd be more methodical. Again, I think this is due to the ladder being thinner.
One of the things we've looked at, and of course the move from the 88.25 level up to that 90.25, there was a volume EK. All three of the internal components of that particular chart working together, and we've seen even Graydon yesterday talked about that in his discussions, where all three of those internal charts, the erg, the bias, and the attack, all working together in a nice sort of spike fashion, can have an immediate impact on the market move. I coming for potentially an attack cross here. Maybe on our pullback here we might see something eventually. I'm not sure if that I will attack.
Very quickly drop right back down to where we were.
Yeah. Those are the moves that oftentimes there's that J now attacking red and the I separating red. So see how those components changed real quick, and this is part of that impact of that thin ladder where things can just happen. I'm not sure what oil did there, Greg. We've been watching the impact of oil recently in terms of some of these bigger market moves.
Right now, very quickly, is a very good time to point out that you never want to chase a trade. If you had seen that G attack cross, which was ever so slight, and how the market moved very, very quickly, it actually wasn't apparent that the G attack crossed until the very edge of that movement. It was, actually, I'm not even sure what it was to indicate that the movement might come in, but at the very top of that movement, right as you could tell that the green line had overcome the red line on the G attack chart, it moved maybe another point or so before it turned right around and dropped again. And this, we say all the time, do not chase a trade. And what we mean to say is that after there's been a significant push, the market must follow a sine wave pattern. It's just part of the way the market works. And be aware that after a large push, there's usually going to be at least some sort of a pullback. And we maybe, here's the I attack crossing green.
Yeah, the J, the D, the volume, the tick, the E, the F, the K. All of those things came in there just partway up. I was about to try to say that, but it already moved up here a little bit, right up to this now 90-50 point of resistance. And just some quick movement here, guys, that just even in trying to discuss parameters, they're changing pretty quickly. And
it's unfortunate that we're starting to see chaos reflected on some of our larger charts. The 10s are now conflicted, 5s are conflicted, A is angled down, B is angled up. So we're going to want some more clarity before we can really identify a general direction on the day. So keep an eye out for consolidation of information. Actually, I shouldn't use the word consolidation because we use that for when the market's not moving very much. Keep an eye out.
Our 5s and our 10s change here, guys, with the separation of the H attack.
That was very fast.
We moved up through that 90-50 before I could even. I just saw those components happen. 10-5, B, C with the I attack, and see if we can see some manner of pullback. But if those components do stay upward, that could be the indication of at least a move to the 92.50, maybe even up to that 93.50 level. The fact that the volumes, the ticks, at least the volumes and the ticks into a sine wave pattern the last couple of cycles could have impact there. They're starting to not turn. 4 components with the H and the I attack, and if this breaks through the 92, this could really have a move up despite our scalp ergotics being at the top of the range. All of those smaller bias charts are spiking.
All the scalps are going into a red cycle.
And just, I wanted to actually take that from the 92 level in terms of testing that. And it didn't actually process. But we'll take it from the 92. This was one, as I say, I'm trying to talk about it at the 90-50, and that would have been the ideal spot in terms of that particular break, but in the flash of a moment it was already up to the 92.25 level. As this maybe advances toward the 93.50, I can even lock in right behind it, at 90. I'll certainly lock in a tick, but right behind it at the 93.25, didn't break through, and I just took that point. Didn't break through at that moment in time. Well, there's the breakthrough, the 93.50 now. Touched off the 93.50, came back, had locked the tick, and then just locked the point in case it was another bounce off of that 93.50 level.
Just playing that kind of tight because we were higher in the range, and we've seen some big bounces here already this morning. So just as easily as it could have moved up, and that's what we were looking for and what Darren was mentioning. And here we go, we're coming up closer to the 1900 on the S&P.
And of course now we have a 6 component, and looking back at it, a 6 component with the G also crossing 6 component in the bigger setup here, bigger charts. So that could have been something had I looked at that, or had one of us sort of mentioned that, just to continue to hold that with the 1 tick lock in. It might have come back and taken out, but at any rate that might have been one to hold as those other pieces of information came in. Now that they've come in and it's moved through that level, there's the possibility that it can move to 99 now, back to the 1900.
S&P just about tapped on 1900. I think it was a 1/10 of a point away, or 2/10 of a point.
So someone's asking about the last setup. We talked about the 10s, the 5, the A, and the C at the time. There's 4 components there. The smaller charts with the ergodics were at the top. It talked about the break of that 92. 90.
Well, he was at 90-50. 90-50 was originally
90-50 at the time, but it broke through to the 90-92 very quickly. And so I was trying to talk about that, and that was another break point there. And so talking about it moving through that level, if it did break that 92 level to enter on that break, just with all of those 4 components coming in the bigger charts. So that was that behind that. And then in terms of being in that, coming up against the 93.50 level, just locking the tick and even the 1 point behind that at 93.25 in case there was a bounce off of that. Obviously there wasn't a bounce off of it. It did move through subsequent to locking that point.
Look like we may be taking another run at this 1900 of the S&P.
Yep. And this may be another one of those scenarios of looking for it on the break, despite the smaller chart ergodic patterns being in a non-desirable position. And you just see I tried to get in there at the 96.50 and it was gone. I tried the 96.75 and it was gone as well on that break.
I actually entered it on my demo ladder. I'm tracking this trend as well. I actually managed to get 96.50, so I can be watching this for you guys.
Okay, sounds good.
So break even's at 96.50. We've moved ahead a couple of ticks in this trade so far. We're at around the 97 level.
Again, we are at a significant point of resistance. The S&P is at 1900, so it can bounce off this.
Okay, well I'm
had nice
in at that level now as well, just as usual.
At a nice push there initially, and it's backing off that. That was that push I was hoping. I think we were hoping would push through. We did tap on the point. I actually got in at the 96.50. It didn't fill the point. It could certainly push higher if we can actually get up and maybe close a gap.
Some real sharp information with the G and the H attack continuing to be separated, the 10, 5, 3, and now some spiking in the E and even in the F I saw there with the L attack perhaps coming together. So see a lot of jumpiness, a lot of bounciness. If we can get through that 97.50 and be able to lock in that point, then probably the 1900 is the next level of potential bounce.
These volumes in ticker gothics are also on the verge of turning green as well, so that could come into play and support this this trend we're tracking. But again, you know, there is other information coming in. For example, the H and G both just lost their spiking that they had just a moment ago. So this appears as though maybe it's slowing down here.
And B as well, softened. 10.5 still there. One's volumes ticks. Well, one's starting to turn down. Volume tick, as you mentioned, could move up. And 2 ticks are certainly open. This is another potential attack of the 97.50. It's either going to be up or down. In this particular scenario, one could look to keep a tight stop. The last low was at 96. And so even having a couple of ticks below that at a point, in this case a point of loss at the 95.50, even a little bit more aggressive could be below the 95, as if you wanted to take a look and continue to track based on the 10, 5, and 3-minute ergodics, waiting out the smaller charts. And there it is, moved ahead here a little bit, touched on the point again. I think our charts have stopped here, guys. Well, there they've come back in again, a little bit of a lag. The 1 point opened up, and I just locked in that 1 point.
We're at a point where we've just 3/4 of a point above the 1900 on the S&P, and it's trying to push through. Oil's been moving up as well. It's near the high of its morning. So again, just the volatility around this point or this area, locking in that point, even a couple of ticks, given it hasn't shot through from where we first wanted to get in. We saw that momentum building. You see the EK coming in strong down, just K just backed off. Locking in that point, well, it's there. Even a couple of ticks is oftentimes a safer, more conservative way to approach things, unless, of course, everyone's account size and contracts for trading is different, so people prefer to have a bigger stop and trade for a longer trade, seeing some of the possibilities that are here as well. Comment here from someone that's been a bit harder to follow since we're not taking the arrows. You know what? It's been a bit of a mind shift for me as well too. Always looking for the setups that we have, and even looking for the attacks to support the setups as an added filter instead of of taking the arrows. For a long time, we would see setups come in, and we would expect an arrow to come in like we used to for several years, but the arrows just weren't as timely. And we would see a place that we would think, hey, I'm getting ready for that arrow to come in. The arrow wouldn't always come in like they used to. And again, Darren explained that in much more detail before. So what we're doing now is we are looking for the setups, the components, even the attacks to help support our entry. Of course, if we're at a significant point of resistance, sometimes that can hold us off from entering a trade unless we're the battering ram and running up against a point of resistance and have very strong indication from some of the scalp charts that we could very well push through. Oftentimes, if we have a strong setup, we'll just jump into the trade and not wait for the arrow. That's the bigger difference. It takes a little more comfort level with the charts, comfort level with your own decision making. Before, we used to rely on the arrows to help us make that final decision: do I buy or sell? And now it's it's more up to us when we see that strong setup come in.
Yeah, volumes, ticks, DEF starting to come in downward is a point of resistance, and that's exactly right, Greg. What we do try and endeavor to do is talk about the patterns in these potential setups as they're coming in, and that is the moment of decision. So I understand the perspective. If you're waiting for the arrow, then that's the definitive indication of at least in terms of historically tracking a trade. Now that's shifted to the appearance of the pattern. So if the appearance of the pattern that you're looking for and that we're talking about comes in, then that, in many respects, has become the arrow. If the arrow happens to be there at the same time, great. But if not, the appearance of the setup and the parameters that you are looking for in effect has become the arrow. And in talking, I think I missed out on that 6-component scalp move through the 97 or 95.75 level, but it may have been bouncing around there. I'm not real sure. 10.5B still upward in those 3 minutes turning, so we're still, I think, going to be dancing around in this top of this range here. See what happens when these smaller charts begin to turn up. But there is a 10.5B, which is a 3-component pattern upward in the bigger charts. Do still have separation on the G and the H attack, but smaller charts decidedly red at the moment, though perhaps coming near the end of their particular cycle.
I attack incoming red. If that red line crosses over, we can expect to see a short-term push down. Threes are also there, well, starting to be there. C is there.
These fives are also getting to the top of their range, and so if these begin to soften and eventually turn red, which they will according to just the way that they typically tend to move, we could really see some downwards pressure start to develop. And so right now we do have these threes red, C's down, and yes, we do have the B bias correlating with the 5, so and the 10 as well. So we do have that trend right now, but I believe in the near future we'll see these 5s turn, and we'll have this 5-3 potentially pushing us down. So I would say for myself, I'm watching more towards a downwards fashion in the nearer sooner future here.
This is definitely looking like a downwards trend coming in. The fact that the 10s are still up, the 5s are still up, and the B is still there means the market is not ready to push down just yet. We talk about the market building pressure, and this is a prime moment of when the pressure is just starting to build. Actually, we can't really say for certain what's going to happen right now because this is a better definition of conflict. Developing pressure, yes, because the threes were gaining strength a moment ago, but they've lost that strength that they were gaining. And in fact, the 5s have gained a little bit of angle going back upwards. So this is a moment when it's really a deciding moment in the market. In the next maybe half hour or so, we're going to see a trend based on what happens next. The threes could change their cycle midterm, and they could go back green, or this could be just a short-term push upwards, as we did have all the scalps start to go green, and now they're starting to turn red again. That K attack is about to cross over red. So right now, a lot of chaos, a lot of conflict. It's a good time to sit back and to consider what other information is developing and look for better, stronger charts before taking a trade. Also, in response to a comment that just came in, we're going to be a little more intentional about announcing what setups are in place before taking the trade, or at least if we do take the trade, we're going to be talking about what was there to develop that caused us to want to take the trade. And most commonly, whenever you're looking at a trade that happens very quickly, the one that we didn't talk about, one of two things will happen that will cause us to want to enter in right away. That's something you want to take advantage of immediately upon seeing it. One
just is telling you guys, I just tried to talk about it ahead of time, but we do have and did mention the 5BC or 5 10.5b. See what happens here in the 5 seconds here until our 10 and 5 replot, but had the volume tick EKFL spiking at the time.
J attack is crossing green.
Yeah. So that was the reason there, and we did talk about the 10.5. Of course, that's now settled a little bit, so even locking in a tick or taking 2 ticks
We lost
would
the
be
P
the way
bias.
to do this. Yeah, but now that and it just took it out at a tick. So that was in the scenario of having lost that particular setup on that replot, but being able to lock in a tick and see whether or not it would have continued to spike further. And I think it probably will, as these ones are starting to turn and the J may attack.
We're half a point away from the 1900s. We're right around that volatile area as well, too.
But at any rate, in terms of the approach of just locking in the tick, and I know we've had a couple of comments of just about being clear ahead of time. Did talk about that 10.5b, and did talk about the overlap of the, and certainly have talked about the overlap of the smaller charts in that particular direction as an entry position there. Just didn't want or wasn't able to jump in while you were chatting there, Brandon, but
No worries. I was saying that there were 2 reasons mainly that we would enter a trade without announcing it first. One is that if the angle on a specific chart we're watching goes from 45 to 60, very quickly as we're dropping here, there's actually not a lot of information we have. 3s are still at the top. They're kind of still flat. C's still there. But other than that, we don't really have very much information showing a downward trend. The K attack just crossed over a moment ago, and the J is actually separating red. Whenever we see a separation like we do right now on the J attack, that is essentially the same effect as when the attack chart crosses. So with such a significant spike right now on the J, we can maybe see the I cross to support that, showing a cascade and something we can follow deeper into the future. But again, a lot of chaos right now. Rather short term, K attack is about to cross green. It looks like we want the market wants to go down, and it's just being resisted by some of the other green pressure that took so long to build in the first portion of our session. And if you look at the vertical lineage of the 10-minute column, how it lines up vertically, you'll notice that right exactly where the G attack did cross green, we saw a push up, a very significant push upwards. It kicked in noticeably about halfway through the push upwards, but it rose from about 1890 all the way up to 1897 just from that one.
Sorry, 3CI just coming in here now.
There's
downward.
the I cross, red.
And it's just a little bit late, but I'll just track it from this level, just from this point. Wasn't able to talk about it there at the 94.25 level. It was a little.
So to be clear, this is a 3CI that we are in on, with the B developing in behind it, A there behind it, not quite at 45 degrees, but still behind this trade.
Of course, the smaller charts volume tick downward, and 5's starting to show signs of turning.
Lock in a break even or a tick with that quick bounce down. It can very quickly bounce right back up.
True enough.
Scalps are all turning green.
And remember, for that entry there, the reason
Just
for
take
entry.
2 ticks on that.
Great job. The reason for that entry there was the IATAC crossover. So that's serving more as a potential signal for us to be entering in on these trades rather than the arrows, because
I just backed off.
Right, the IA did just back off, but the original reason for entering this 3CI was the IATAC crossover, because that initial crossover we had talked about yesterday as well is so dramatically strong that that initial push can be pretty significant, and so it's usually the ideal time right when it starts to cross over and spike pretty strongly. That's usually the ideal time to be entering in on that trade. Hence, we took the 3CI.
Of course, there's a couple of ways of playing that. One was having a point, even 3 ticks, set as a target and just taking the profit, or as Darren was doing, trying to trail it and very quickly lock in a tick or 2 ticks. because there was a possibility of a bigger push down. So he took the more aggressive approach on that trade. A more conservative approach would have been to just take the point and set your target at a point or 3 ticks, whatever target you decide to go after. I know, Graydon, you mentioned the other day, sometimes you've been setting yours at 2 ticks and just trying to get that initial push. And there's nothing wrong with that.
There might be the appearance of several components scalp-wise upward. One volume ticks turning in, EK, and then the F was also starting to angle up. We saw a bit of a spike up. In the course of this at 10:55, we saw the 5 minutes turn red. And starting to see bigger picture development of a 3, 5, ABC downwards. So, guys, if we just forecast ourselves into the future, we may see 1 or 2 scalp cycles upward. If those bigger observations continue as they are, then that will be the bigger view downwards. So
we're actually losing one of the top 10s here. It's losing angle as you were speaking there. Not quite. I mean, of course, it still is green, yet it is looking as though it may be turning red. Mid-range, perhaps. The bottom 10 is still pretty diligently strong there. Has an averagely nice angle. However, that top 10 is starting to become pretty flat. So it appears, though, as this pressure that we're building.
Sorry, volume EK, guys. We talked about the 3 internal things. That was just spiking there a moment ago. That's on a scalp basis one of those tougher ones to do, just to be able to not only recognize that, but sometimes the span of movement might only be a few ticks. I just wanted to point that out. It was spiking there at that time.
That E crosses over into green, and it was closer crossing. Oftentimes that leads to a push. We're at a point of resistance, 94.50.
Sorry to cut you off there, Graydon. Just finish your thought now.
Oh yeah, no problem. I was just merely noting that overall it appears as though the pressure is still continuously building downwards here. So just keeping an eye on that.
Softening on the 1s here, and overall, what's our pullback? 2 points off of the 92.50 in terms of the extent of that pullback. Still think there's possibly some pressure in the volumes and the ticks, especially if the ticks turn upright. But our biases, majority of that DEF will have to move into green for us to see a real strong indication of a move above the 94.75. Of course, our 3s are still looking good, the B, the C, even the A. Here's that E into green as we talked about there a moment ago. Volume, 1 volume tick, E, even F, and the E backed off. Saw that moved us to that 94.50, testing the 94.75. There's the move through tick FL. There's the 3-component spike there, followed by the volume tick. This may move up here quickly, and so wanted to try to get in on that at 94.75, but of course it moves and advances pretty quickly. You can just try a 2-tick target with the 6 components. The F is now backed off itself. That strong volume tick, you could see as it was breaking through that 94.50 level that we had the tick FL come in. Just in talking about it, I wasn't quick enough to jump on it, but just want to visually track that and just show that as an observable kind of pattern. See the 5 minute went to green with that push. 1's still very sharp, and that J separating just backed off. Could still have impact upward in the aftermath of that J spike. And we're seeing that here with still strong volume tick. That E continuing to spike, as well as the F could move through the 2 ticks. Of course, the upper level there at 96.25 is a potential bounce spot.
S&P's a point away from 1900 now.
And just filled the 2 ticks there on that. But you could see that was, again, a little late getting in on it, just as I was discussing the tick FL just coming in behind the volume EK, and of course the 1 minute's being up. All of those components together were some strong information as the E and the F went into green. And Greg mentioned that, and I think all the guys mentioned that. as they cross into
5 seconds.
that. Go ahead.
Replot in 5 seconds.
Okay.
Short replot.
Total replot.
And
conflicts.
Lots of new information and lots of conflict.
Yeah, 5s, 3s conflicted now. Change in the A bias. BC still angled down. 1's still angled up, so there's still perhaps some pressure upward. Of course, our E and our F continues to be up. It's interesting how the strong ones work with the E and the F bias. And of course, when we see the attacks in those smaller charts particularly work in with that, there's strong pushes oftentimes in that particular direction, supporting the bias and the ergodic. And also, the other agreeable component seems to be when the volume and the tick, when they both, as ergodics, have strong pattern information. And then you see so just case in point, now volume tick, the E, the F went into red. We had a drop down through that 94.75, 94.50 level. Very nice to see when all of those ergodics, or the majority of those ergodics and bias and even attack components in the scalp area all work together. Even if it has moved ahead to some degree, that can be still some strong information.
So then, in the meanwhile, while we're waiting for some better information from our longer term charts, it still looks to me like this wants to push down. We've been hovering around this level for about 20 minutes now. The G attack and the H attack still haven't shown very much indication that the market's getting ready for its push down just yet. So for a bit, we're going to talk about scalping and talk about the scalp charts. So we have 9 total, 3 attack charts, 3 bias charts, and 3 ergodic charts. That's the 1 column, the volume column, and the tick column. Now, the best spot to enter a scalp trade, if you treat the J attack as you would the G attack, if you're looking at a long-term trade, the G attack crossing would be a prime opportunity to be entering that trade. If you're looking at the scalps, the J attack is a prime. Okay, so right here, J just crossed 94.50, putting in a marker going down. I'm writing this down on paper. The J attack
I'll put
red
it on
line.
I'll put it on the screen. There we go.
J attack red line. Okay, so now it's pushing through. Well, let's say we're gonna.
Go ahead. Tell me what to do.
Have a 3-tick target, and there it is right there, 3 ticks. So that's out of the trade. So that's a 3-tick scalp right there that just took place, and that was because of the J attack cross, but also because all the other charts were already red. So note that even with all of the red developing pressure, the J attack cross was the indication right there that there was a trade that was coming in. So J attack has indeed crossed red. It may push through for another tick or two, but my hunch is that this is ending as the L attack is coming closer together.
The other things, I think, Brandon, worth noting on that, yes, the J attack at the time was valuable. It didn't entirely cross. It actually backed off. But what we had was the K separating. We had the 3s turned down sharply, and the 1s now, in the course of the move as well, the 1s started to turn down. So there ended up being a lot more information coming in, which then I think contributed to the J separating. But on that instance, it's important to look for that, but also, as you've often talked about, the other components in behind it to support that. So the 3s were strong, the volume, the tick, and again, it's
the
a
next
quick
J
move.
cross right here at 94. Okay, well, it seems to have uncrossed. Still holding a marker at 94.
See that here?
that last J attack where the red crossed, those are the types of attacks I like in terms of the nice, sharp, perpendicular cross that was coming. And yeah, when it did cross, it backed off, but then it came right back in, and those are the nice perpendicular ones. We can see that happen on the K here as well as
Okay, here we go.
progressed.
No, they don't hear.
It went through by 2 ticks. It just touched on it. If you're on a live ladder, usually that's not enough. Usually it needs to tick through by 1 tick to be considered achievable. But actually, ignoring the scalps for just a moment, the H attack just crossed red, and that's one of the larger moves we've been looking for quite a while. So even though short-term the scalps look like they're all starting to turn green, we have substantial red pressure that just broke through somewhat of a barrier in the 5-minute column, and hopefully we can see that start to develop in the 10-minute column as well. So,
Sorry, guys, can you hear us?
yep, I can hear you.
Okay, good. Okay. Sorry, just there was a couple of moments there where it didn't seem that you could.
We're very close to 3B, C. The C just flattened. Shorter term point of resistance as well.
Yeah, we've got resistance here at 93 and 92.
We bounced off this area a few minutes back before we took that run to the 1900. Even a couple of ticks below here.
EF bias are pretty deeply in the red.
And I think for tracking, Darren, we're up close to 4 points as well.
Well, with that last 3-tick follow of what Brandon was talking about, it's at the 4 points there now.
So, and again, just to point out, it's always good for one to lock in their profit whenever they hit their profit target. That's different for everyone. Some people have said they're happy with a point a week, a point a day, several points a day. Everyone's level that they're at is different. So in terms of our tracking, we're still going to keep tracking here today, but notionally we did hit that 4-point target.
Okay, here it goes. If it touches on 94.75, that'll be a 2-tick take. There we go, 2 ticks. And more was possible there. That actually happened a lot stronger because there was a double cross. The J and the H actually ended up, or the J and the K actually ended up coming and crossing at the same time. And it seems that whenever there's a double cross in the same direction, it's even stronger of a trend short term in a singular direction. So even though that showed some resistance because of the H attack crossing red short term, the push green happened very quickly, and actually it's dissipated pretty quickly as well. The J attack, I'm not sure what it's doing right now. It's I can't even see the green line. The red line's right on top of it. But the K attack is coming right back, and there's a red cross that just happened. That red cross was at 93.50, and that's probably the pressure from the H attack building up and pushing through right now. The threes are really, really strong angle downwards, and there's the J that came in. So that was a J and K again at the same time at 93.50. So that was possible for another 3 ticks or so. If you're a scalper, this is your day. This is you. This is what you do when you're looking at your trades. You're basically just following the right 9 charts and trying to identify when is the right time to be jumping in on these trades and these smaller movements. And the last 3 in a row that we talked about would have worked, but scalping doesn't always work. Know that if you are interested in scalping, it is a very risky way to trade, because the higher number of trades that you have during the day, the higher your commissions will be when you're live. And therefore, there's much more of a need to have higher performance when you're scalping. It's much easier to gain and keep profit when you're trading in the longer term sense. So just as we were waiting for some of the larger charts to kick in, so to speak, that was just an example of how you can scalp. Even right now, we're starting to see a green K attack show, and J is coming back pretty closely for a green cross as well. So this is all very, very fast. Feel free to ask any questions about anything that just happened. I was only writing this down on paper. These were not being tracked in terms of a live or even a demo ladder. It was all very, very fast paced, just for demonstrational purposes. And to be clear, the reason for taking the trade was seeing the trends come in the other charts. Like, for example, right now we have the volumes, the E, the D's actually just backed off, but still the volumes in E, tick and the F are all green, and the J just crossed green as well. So this would be another marker for an entry. Actually, I'm not going to put a marker in because that K attack developed before the J did. And so because those didn't align, my faith must be less.
It tapped on 2 ticks.
It did tap on 2 ticks.
Yeah.
What was interesting about that was the volume EK, all 3 components, and then right behind it the tick EF. And I'll just let that go out. But I just was trying to visually follow there for you so that it would be observable on the screen. But so I entered there when you said putting in a marker. But I liked the volume EK. I liked the tick EF. I think just in reality it was already, the move was already there. By the time, or the effect of that had already happened by the time that really even became possible. Here, a volume EK coming in again as a possibility, and there is that move up, and with a 2-tick lock-in, there was a 2-tick fill. So that was, at least in terms of my execution, more of a timely entry there. The volume EK spiked. I got in. It filled the 2 ticks very quickly. As opposed to the last one where I think it was Greg probably closer to that 94.25, 94.50 level. 94.25 actually was what it was, because I just let it get stopped out at the 2-point stop. But now we're seeing, well, that next volume EK backed off. But as I say, the immediacy of the scalp charts have to be acted on in a very quick manner, as they are often very quick. I know there was some breadth of discussion even in this last series of up and down patterns in the 317 price chart that you can see, and some of them are very challenging. Here's another volume EK spiking with the tick FL. Could be a possibility of a break upward, and that just backed off. See the 1 minute's trying to turn. You can see a lot of information try to come together, then back off, but ultimately, looking back in the course of time, you would be able to see that it did work or it didn't work despite the jumpiness. But you'd like to see all those components hold. We've been in this little bit of a range here since probably 11:05, 94.75, 92, 92.25. And now we have all conflicted scalp ergodics. The ones just changed for us, though. 5's conflicted A, B, C all down in red, and that could have an overall downward move still to the market. We can see that in the 5 and even in the 3 and even in the 10, just sort of the downward channel for the last, well, since about 10:30. So we have 3 C, D, B, C, D, A, B, C, D. That could be very interesting with a scalp appearance downward. Of course, we will, and I've often talked about being in this tighter range. It's got to break either up or down, and sometimes those patterns become strong at the top or bottom and end up being bounce areas as opposed to break areas. Right now, EK spiking upward. I could keep us in the middle of this range or move us to the top of it. That B may have backed off slightly. A, B, C, 3, the top 3 backing off. And of course that D. One of the other interesting patterns is 3 of 4, even 4 of 4 in the adjacent charts. So 3, 1, CD, or 3, 3, CD kind of thing, with one of those associated attacks coming in as well, I or J. Similarly with the 5, 3 and the 10, 5. Those can tend to be strong patterns as well. Threes have come back, as well as the A, B, C, even the D. See the volumes and ticks turning. So this could be materializing for a test of that 92. Perhaps a break that would keep in line with the overall trend downward. Five starting to turn. That bottom or top three flattening now again, as well as the bottom one. This looks like with the volume tick E, F, D coming down to the bottom of this range, potential bounce spot again. So these are the challenge ones. If we can see some indication in that K attack cross or even that J that it could have enough pressure to break through that 92, that would be something to look to track, keeping in mind that it could bounce, but the fives turning in behind it might provide enough pressure. And there it did break. Tried to get the 92, but did not materialize. Managed to get the 91.75. And so the reason is those fives coming into play, A, B, C, all still there with the D. The ones now coming in. Six component pattern coming in here now.
Actually, every single bias is supporting your trade right now, the trade you're tracking. Every bias is down.
And this might be one to, not to even lock the tick, but be a little bit more future looking here, just with all of these components coming together in a downward fashion. Locking in a tick might take us out at the tick, but being more conservative, just taking two ticks, a little bit more aggressive, just with the potential of a move down to 90. Looks like it might be a bounce spot in the 3-minute price chart toward the left side of that, and then more particularly down at the 89 level. So this is a little bit more aggressive, but certainly with all of those components, initially with the 5 components in the scalp, the A, B, C, D biases, sort of holding this level.
So at this moment, oil has dropped a few pennies from where it was as part of this drop.
Lock in a tick here now.
The S&P is moving
and
down.
I'll just take that point.
And we could move possibly further, just being conservative to take that point. We've seen a lot of bouncing. We are breaking that point of resistance that we have had. Longer term, more aggressively, we could go down to the 88. And that'll be the next major point of resistance. We have seen some sharp bounces in opposite directions as well too, so just keeping that in mind, locking another point, taking profit or taking gains in the sweet spot. Let's just watch this as we're tapping on 91.25. Volumes ticks are moving up. E and the F, K were there. The L, K's backed off. E and F are still in red. They move up towards that break even turn into green. D is angling up as well. Could push back up towards that S&P 1900. We still need to see a little more movement yet.
Let's see what happens when our 1120 replot. 5s are still sharp. 5AB. 3's agreeable. The 10s are up. I would like to see, I guess, guys, bigger picture, scalp charts to sort of mitigate themselves, begin to move back down again. But as you say, Greg, scalps could become stronger, and then that could change that whole dynamic in the bigger view that what we see right now with those 5s, the A, the B. Interestingly, that eye attack is coming in green with the 3s, perhaps trying to turn.
Otherwise, this could just be a pullback on a bigger trend down, as you mentioned, with that 5A.
That would be my leaning. I've often actually talked about...
I is about to cross green. J is close, but it's weaker.
We have 1 second until our 5 or 3s replot. Did cross with the I, but it wasn't a strong cross. 3s did turn, but all the biases are still in the red, and that's a waiting there. We've talked about before those first arrows on the bigger charts, particularly that last candlestick had a first red arrow on the 5s, starting from the turn at the top, and had a nice, at the time, I attack or H attack cross as well. So interesting to keep that observation there to see what that particular pattern long term may produce, and interesting that the A is also agreeable with that. We do have the challenge of the 3 minutes trying to turn. It did have the I attack. Volume EK. Here's a volume EK pattern coming in here upward with the tick, almost the FL as well. So even a couple of tick as a target, certainly did open up there, took those couple of ticks. Volume EK, that all came in very quickly, did manage to talk about it before entering, but on that spike was the entry. Was no arrow, as we've often noted here, not looking necessarily for that arrow, but saw that volume EK spiking, saw the ticks also in agreement, saw the 3s starting to turn, did previously have the I attack, possibly could have looked to hold that for a longer move. Just a comment about trying to talk about the trades ahead of time. Again, understand that, try to do that. Certainly that last one I did with that volume EK. You know, as we say, it is sometimes difficult. We're not looking for arrows, just as we're talking about even the setup. Sometimes the market's moving and you just have to get in to track that. Sometimes I've actually held off and been late and then tracked it at that point. So as we talk about these patterns a little bit more and some of these other ones, then being able to see them coming as well, even as they're even being talked about, and recognizing them in the course of time, even getting in yourselves if that's something to track ahead of even us beginning to talk about it. That's the ideal goal here in all of this.
And again, as Brandon was talking about a few minutes ago, a lot of those shorter scalp patterns, when they come in, they are very quick. It takes practice, and sometimes they happen so quickly you can't verbalize fast enough what you're seeing. And they aren't for everybody either. We did see on this last push we talked about down at the 91.25, that point of resistance, we were tapping on that. If that E and F could cross into green, the market would probably push up. It took a few moments to do that, but it did push up, moved up 2.5 points. And
here's a 1 DJ with that spike. I think it might have been there a little bit, but the 1 DJ, just even tracking that. 1 DJ still spiking in terms of those three components. We see a bit of a challenge potentially with the volume tick turning to the top, but the E and the F still in the green pretty thickly. Of course, overall, those 10 minutes are there. So that did back off a little bit, even just if that's something that you just want to exit on based on the loss of that spike. I did there, just took a 2-tick loss on that. But that came in very quickly. Wanted to try Greg to talk about that ahead of taking it, and I think might have just been a little bit shy on getting in at the optimal spot on that.
Yeah.
But
well, that developed very nicely as we did move up through that EK and the volume tick EK that you entered last time as well.
All part of the same progression.
As we kept moving up in that range, the ones and the D, the J did keep getting stronger. Of course, a nice I attack cross during that time as well.
We have a G attack separation, and our 10s are still up. Even in this whole push downwards, our 10s have stayed angled up, or green at least. H attack it was coming in for a green cross, and it backed off. And now we're looking at, really, this may have reached sort of the lower end of its range, and it may be starting to come back up. The G attack cross shows us that over the next 10 minutes or so, we can expect to see at least some movement upwards, even if it's not very strong of a separation. Or sorry, I said cross moving, I meant separation. If that H attack comes back and crosses green, then this could be building a lot of pressure upwards.
So we have 3-1. We have that I attack separation. All that supporting your discussion there, Brandon, with the 10-minute and that G separation. We do have the challenge just in our smaller charts, volume tick, trying to turn down. Our E and our F, those still in the green, just angled somewhat downward. And 5s, of course, themselves, 5AB actually, downward. So interesting, we've got so many, in some ways, conflicting parameters. We've got a G green separation, 10s upward. We've got 5AB downward. We've got 3s green, but flattish. We've got 1s at the top, 1, almost the E spiking there, but we do have that D spiking still. We may see a J separation upward here. 1 DJ may come in at the top of this range, and we may see a concurrent spike in the E and or F. That could come in all counter to the volume and the tick downward. Try to just sort of lay that foundation. Just if this does happen, then the decision will be sort of a quick one. We're starting to see the 1s flatten. It may not be that case. Volume tick DEF K coming in downward, and that may be something in the short term that could reflect a downward scalp pattern. So just trying to lay that foundation of possibilities here ahead of time. And there's the press to the top here. Don't really see anything except the 1 starting to come back to angle. And this does look like it's going to move through, but apart from that E now starting to spike, don't really see, and of course obviously the 10 minutes themselves being upward.
A bias is flattening. It was angled down before. We are just tapping through the latest midpoint range of our recent high, recent low. The high being around the 96, even 96.50, which is 1900 on the S&P. Of course, our low here of 89.50. The recent low, 89.50, 89.75. So we're just sort of in that middle point, which oftentimes is a decision point for the market as well, too.
We do have a new blue trend line plotted, guys, on the 10 minutes. I know it's been there for a little bit, but
volume tick DEF-K separation.
Starting to come in downward, right? Volume, well, we did have the K.
J cross red, 92.50 marker, just as a scalp following.
We're at this midpoint range as well, close to the bottom of our shorter term consolidation. So we had a tick or two to go.
A volume EK, the K backed off slightly, followed by a DJ. The one's turning, of course, the tick's down, and this is now turning into more of a 6-component thing. There's the 2 ticks that did fill. So initially on the volume EK, K did back off, but the pressure was still there with the DJ coming in, as Brandon noted. Greg talked about the pressure as well, and just had that 2-tick target and filled that 2-tick target. So we did talk about all of those possibilities, up or down, of those parameters that could come in ahead of time, and then just being able to take that as they developed, not necessarily being able to announce it exactly ahead of time, pretty much right on time in that scenario. But EK spiking upward here, guys. Still have the 10s in nice fashion upward, but nothing much to support that except maybe those 3 starting to come in.
So that last trade down, important to also note that strong 92 support level. We tapped through by a tick and very quickly bounced back to 2.5 points, almost 3 points.
Sorry, volumes and ticks seem to be turning here. The ticks have already turned and they're green. However, the top volume ergodic is still red, as well as that bottom, and now the bottom is flashing between green and red. But they are supporting, just to kind of play off what you were saying there, Darren, that would be supporting what you're looking at with those 10s and 3s as well.
Yeah, those 10s are very, very nice now. In fact, they are from a bigger perspective, the better looking ergodics. Ideally, you would like to look for something in that direction now, particularly as the A has started to come into alignment with that. Before the 11:30 replot, it was angled down, though we did have the G green separation on the attack. Softened now at the 11:30 on those 5 minutes. They're not as nicely patterned as the 10s are. So ideally, there may be a scalp pattern downward in this upward channel that's beginning to be formed. You would like to see something high to mid-range in that if you're looking at something downward. But overall, if that doesn't materialize, if you're looking at something that materializes the bottom range of that, well, there's the strong possibility that that could be a bounce spot continuing in the upward direction along with those 10 minutes, along that 10-minute channel or trend line that's beginning to form. So anything downward, there is a qualification on that in terms of where in this channel that you would consider entering that. If it's at the bottom, there's a lot more risk involved in that as a potential bounce spot, given how the 3s have turned now, and the 10s, and the fact that all of the A, B, C are angled up to some degree. Still in red, but angled up, suggestive of the buyers starting to overtake the sellers. That C bias just changed at the 11:33 replot, but still have 3 minutes up sharply. So that's what we're looking at here, ahead of time, discussing that. 10-3, almost an AB, looking for scalps, patterns to begin to come in upward, ideally for something along an upward trend line.
Holding this 93.25, shorter term, the 1D is down. We'd want to see something out of the E and the F as well for direction as well.
As Graydon talked about, volume tick could be turning. There could be a strong, quick volume EK, tick FL, combination of those that come in, push it through. We've got a 3-minute and a 5-minute downward trend line that's a resistance level here. So a little bit of a squeeze play. There could be a strong push and break through this level with some quick, sharp information in the scalp patterns along the lines of the 10-3. Almost A, B. Well, the B now actually looks like it's flashed in 45 degrees.
Mr. Tack almost is crossing. Be wary of that potentially developing in very, very quickly. 10s are at very, very strong angle. That's a really good indication that the market wants to push up. But we just need to get past some of this resistance from, first of all, being in this range for so long, but second of all, from all of our other charts indicating chaos or just varying degrees of information.
One D, E, F, all angled down. We're watching for this to turn around on this trend line here, for something to come into alignment with the 10, the 3, the B, the A. There's an EK attack coming in upward with potentially the tick and the volume turning. This could be something that really could develop upward quickly, as the guys have talked about here. Tick FL, same pattern might be coming in, and we've got a point of resistance here at 94.25. Ones are still down, but that DJ may also be forming into an upward trend here. Tick FL. So I'm just going to look to, on that basis, enter that with more of a long-term view. I know some of the guys might wait a little bit longer for, and there's that J starting to spike now, but I did like the tick FL spiking in behind, having had the EK spike before upward.
EK, the J
now,
the 10.3. Yep.
So a little bit more of an aggressive play there. A little bit less aggressive would be waiting for the break of the 94.75 with all of those components developed nicely. That B has changed on us actually. We do have the 10.3 with the A, and the smaller charts trying to break through that. So just locking in the tick here now. Did touch on one point. If it can move through that level, 95.75 is a bigger bounce spot. If it can move through that level, you try to lock in even 2 ticks or 1 point. Try to see about this being a little bit more of a longer term view here.
Point away from the 1900.
Okay, so what would be that 97 range?
Around 97, yeah. Of course, if it breaks through there, we did hit just above the 97 earlier. If we break through there, we could go to the high of the morning, our 1900. And if we get through there, we could even start closing the gap.
So the one starting to turn in behind this, D, E, F, volume tick, 3 sharp, C close to green now, 10A, separation in the G, H attack, green now. So all of those components coming in together. You could take the 1.5 here now, or just leave it at the 3 tick lock, 2 tick lock, whatever you feel comfortable with, a more longer term view, or just take that particular profit that is available here now. It is at a point of resistance, 95.75, so it could bounce. You can see that on the left side of the 317 price chart. All the way up here, there's points of resistance until we reach that 97.50 level. If it breaks that, then it could rise higher. So just locking in a point here now. Got above that 95.75. You could even squeeze that 95.75 by locking in 95.50. If it comes back down, then you've at least got a 1.5 locked in. Or leave it at the point, or take 2 points.
Half to 3/4 of a point below the 1900, even 0.9.
Yeah, if we see some change develop, and of course it can be very quick in the smaller charts, it can come back against us here. So the two points open there for a period of time. That could have been something to take. Just lock in the 1 point.
Several possibilities there.
So many possibilities. Move through the 2 points. Opened up again. Ones, volumes, threes, volumes, ticks. See an EK perhaps spiking downward. That may or may not have impact. See the 5 starting to turn. Holding this 2 point level. Again, 2 points are open.
You may want to put your target higher in case we jump up through the S&P 1900. It could jump very quickly higher.
I'm almost thinking of just taking the 2 points here. This has been a little bit of a struggle with the volume starting to turn here. And perhaps the ticks, EK, coming in potentially downward. This could continue to push up, but some of the smaller charts indicating a bit of a fade here. Or just leave it at the 1 point as the lock-in and just see if the pressure just dances us around here a little bit. There's the one starting to turn, overcoming.
I'd put your target higher, given we've already had a lot of success on the other trades here. Just be a little more aggressive on this one and see what happens. Is my thought. If the other guys want to chime in.
I'd be ready to maybe get out of this. The J attack's about to have a red cross in the near future. The K is coming in at the same spot. The volumes in the ones seem to be maybe turning down. Hold it, but maybe start to trail it a bit tighter.
Yeah. Well, let's do a compromise. A lock and a 1.5. I like the more aggressive play, just as an offset to the point increments that we've been looking at for the most part today. 3s coming in sharper, 5s turning, C spiking into the green with angle as well as the B. I'll lock in 2 points now.
Tapping through the 1900. E is off the chart still. D is spiking. Here we go. Very nice.
There's a 3-point lock in. Or there's a 3-point lock in now. And let's see if we can make a run for that the E Mini 2000. I'm going to leave it at a 2.5-point lock in. Give it a little bit more of a buffer. Also, one of the other ways to look at that is lock in below the trend lines. The most reasonable trend line is the 96.50 on the 144 chart, which is where I'm at right now. Could be a bounce spot. Of course, 317's got a lower trend line down to the 93.50, and of course the bigger charts below that as well. So again, it did touch on the 4 points at the 98. Still maybe have an eye. 90, where we are right now, you can see in the 10 minutes, even in the 5 minutes, 3 minutes is a point of resistance. If it can break through that, then it could breach the 1900. High of the morning, looks like it's somewhere in around 1901 or so.
Overnight we hit 1920.25. Of course, we have that big gap we could close. It's nice being in a trade that you have profit built in. You can be a little more aggressive if one desires to. Let's see if we do get up to the high of our morning, which can be a point of resistance, of course, at 1900. Even a gap close would be very nice.
Locking in 3.5 points here. Trying to just trail it 1.5 or so behind it if I can. But it'd be interesting. That would be a 6-point move with that 1900 target. Certainly entirely possible. As the pressure in the 3 is still strong, C, D, 1s. Our E off the charts. 5s turning up, B spiking, H attack separation, very sharp right now. So you can see just, we've talked about cascade before, but all these things are coming together. This might be a little bit of a tight stop, but I'm just going to try to trail it tightly here. Locked in the 4 points, touched on the 5 points, or through the 5 points actually. Just going to come back to the 3.5 points here in terms of lock. I'd like to try to see us maybe even breach that high. Just really observe for us an indication or an example of a nice long trade based upon some of these components all coming together underlying here. B, C, A, 5s, 3, the 10 had a little bit of a softening in there at the 1140 mark, but still continued to be strong.
We're getting near a point where we could have a bounce.
Yeah,
I'd like to see it hit that 1900.
Yeah, 1900, 1901 looks like the high of the morning.
So just to clarify, the trade that we're in on, the entry took place when the H attack crossed onto the green side, and the setup we're following, at the time it was the 10s, the A, the 3s, and the C bias were all angled upwards, and the 5s have now come in behind this as well as the B bias. So actually we have all 6 of our charts angled green, or angled upwards, and they're green, and the attack charts are all showing green pressure as well. So actually we have all 9 of our larger term charts showing pressure upwards, which is a rare opportunity, but it still looks kind of pretty. And in terms of our scalps, we've been seeing oscillation, but in terms of direction, we've been pushing up for quite a little while now, since the 89.75 level. And the entry point on this trade is 94.50.
94.
Very nice.
I just tried to move my target.
Darren.
It didn't.
I told you to put that target high.
Well, I had it at 7 points, so.
Yeah, and just to add to what Brandon was saying, the besides those components he mentioned, we also had the volume tick, the E, K, and J came in strong as well at that 94.
But that was an example of just taking a longer term view, could have locked in a couple of ticks, could have taken a point. Been doing that pretty much more conservative all morning, but just had the possibility of all of those components coming together nicely, and in fact they did, and had just a bigger move up. You can see through the course of that, biases D, E, F, E particularly, even the F, very thick, very sharp. Didn't really matter what the ergotics tried to do at that time. The bias overweighted things. We had several cascading attack crosses, starting initially with our entry with the J, and of course the I separated out as well, and then ultimately that H as well reflected that. Ultimately originally we did have that G separation. We had the 10s, we had that A coming back into alignment, of course we had the 3s, and we had very initially that G separation. G was always green over red, but had that separation which was sort of an indication maybe at the very beginning that this could have developed. So having a bigger pullback would have probably stopped me out at the 01 now anyway with a tighter stop. So Greg, I would have been out where I was out.
Even a little more aggressively, just keeping that 1900, knowing that could be a bounce spot.
Yeah.
Holding the 99 or 99.50 is a more aggressive lock-in. Obviously, there's a bigger difference between where we hit the high and that trail in that case. A more aggressive way of playing that.
And the very initial entry or reason to take that on that original break of 94, potentially original break of, was it 90? Yeah, it was 94.
Yeah, it was 94.
Did talk about it, the volume EK, it spiked, backed off, and then the tick FL spiked right after that, and there looked like there may have been a DJ coming in.
The J came in as well, strong, yeah.
So I entered that as I discussed it on the tick FL. I said it was a little bit more aggressive, but seeing the DJ, the J particularly trying to cross, it in fact did, and then everything just sort of cascaded afterwards. But underlying it all, we had the 10, we had the A, we had the B and the 3. So hopefully that was a good, sort of methodical approach to that particular trade, and people were able to just be able to see that and just sort of understand all of that progression there. Starting to see this again come in.
It bounced off the 1900.
Yeah, the EK almost came in upward there. You have the volumes, it ticks again in that same scenario, could angle upward. You've got the 1s down, the D down, of course the E and the F now both down. And we may see a change here in 3 minutes. They are potentially at the top of their range, even those 10 minutes. Sharply angled right now. We've got 30 seconds, and it might be wise to watch what happens with our 10s and our 5s at the 11:50 mark. A certainly angled up nicely, 10 AG. Still could be some pressure upward, but we will need to see perhaps all of these smaller charts come together in that upward direction for that. May not coincide. If there is a spike, it may not coincide with that. And we may also have the threes come against us here. EK coming in, FL coming in. And sorry, I just was looking at something else there. I wanted to, but we had the EK Greg there, the FL, the volume tick, and that would have been a nice entry there for that break of the 0150. But sorry guys, I just was looking at a couple of comments that came in there. But certainly we see that now pressure upward. It's a little bit late. I'm not going to chase this. It could continue to rise still now that we're in this gap.
It could rise 10, 15 points,
yeah.
But still.
But I missed the ideal spot.
Yep.
And
there's always lots of opportunity. And just wait for your ideal spots to get in when it's comfortable. If you don't get in, just wait for the next one. Just we were talking earlier about having a more aggressive trail on this trade, knowing that when we push through the S&P or our 1900, that we could come back to the 1900, and we talked about having possibly a stop around the 99.50, and if that had been the case, we would have tapped through 10 points here just a moment ago. Anyway, any kind of profit, be it a point, 2 points, 5 points, 7 points that we were able to track here on our simulated ladder. Any winning trade is always a good trade. We had several pushes up here this morning coming up towards that 1900 level, backed off 1900 in terms of the actual S&P. That had become a significant point of resistance, even the S&P level. Just watching, I have a side chart up here in a browser, and it was tapping on even the 98, even 99 several times throughout the morning, and having come up to this point of resistance, you kind of thought at some point it could push through. If it does, the market's going to move. It could bounce off, as it has many times in the past. This time we just had a lot of good information that came in. Even when it did start to push at the original 94, it hesitated a moment, and one of my inklings was to maybe just lock in a couple of ticks in anticipation that it could bounce off. But we held on to that, and it did continue to push, and you don't get these trades all the time. They don't happen every day. We're fortunate to be able to get in on one here. Consolidating now for the last couple of minutes, tapped on a new high.
We're seeing a change in the 3 minutes here now. Well, there still is the 10-5 AB and that tax separation, particularly in that H. Volume tick EF now moving into red. This may cause a break of this 0275, 0250 downward.
1905 has a larger contract amount on the ask side. Wouldn't be surprised if we do try to come back down to the 1900. Let's see if we break this shorter term support level.
We may see a change in our 5 minutes and 2 seconds.
Coming into a
Could see a change in the B bias at the very least. 5 minutes softened slightly. Go ahead, Greg.
5-point scalp volume tick
scalp.
DEF a moment ago. Again, we are right at the point of resistance or support level. Point of resistance going down.
And this is one where you are taking a little bit of a choice. You're thinking this will break down through, and I'll just, out of interest, just because we're dealing in extras at this point, just seeing if there is, with that 5 component and the eye attack coming in here, whether this will move down through this O2 level.
Again, it is more aggressive, being it is at the point of resistance. Previous one we took going down was a couple of ticks above the point of resistance, and of course it moved through that by a tick and then quickly bounced up the other way.
So we're just seeing if we lose some of these components, still maybe a pressure downward even with a 1-tick target at the 0250. Seeing the 1 starting to turn, loss of the volume, and so we'll just look to get out at 2 ticks down on that particular thing. Considering 1 tick down, but was looking at that eye attack red that may be coming in, despite our 1 starting to turn up. But just all of those components just working at odds against each other. And I know that was sort of a quick entry there. Greg did talk about the 5 components, and I wanted to track what he was talking about there. And it was something that was hard against that point of resistance. We still have 10, 5A, and there is a 3-component bigger pattern upward with the EK did just back off here. But 1's turning, volumes may be turning. FL, here's an FL spiking up, and that could be some indication of a move back up with the 10, 5A. And see if that F can spike across and there can be a concurrent move.
I would like to see either the I or J, green I or J, sort of agree with that.
Yeah,
they're all angled down. So sometimes that FL can come in and be a catalyst, as you're mentioning. We've seen that happen several times here this morning.
In fact, that last bigger move was the catalyst there on the FL, the tick FL.
Absolutely. So you always be ready if those are trades that you track.
And I like the 1's turning into this, but we will need to see the EF coming back up again here. Of course, as you mentioned, no real indication on the J side of things. Even our KL is backed off as well. Eye attack looked like it had been going red, and that was part of the reason in my mind that I liked the tracking of the 5-component scalp downward that you had mentioned there. In fact, it actually may come in without the components now. EK, FL downward. Looks like we're having that eye attack red. And still at this point of bounce.
J attack separation, although they're both angled down.
Yeah, K attack separation right now.
Again, we are at that point of resistance. If we break through here, we could move down to the 1900. We are coming into our last minute and a half of our session this morning. We've, after a slower start, we had some nice activity. It was great to hear from Graydon and Brandon as well here this morning, and hearing their thoughts and insights. Obviously, several more people. Not everyone sees everything the same way. Everyone has their own eye to how they see the charts. And at the end
Not to be confused with the eye attack.
No, of course not.
There's a bit of a joke there. Maybe so.
Or not seeing everything the same way, right? C bias.
Here's our volumes, and the volume EK coming in upward here with the 10.5. There's the spike that I really wanted to see there before. Notice how that came in very quickly. It did spike up, perhaps just a little bit of a late entry here, but you saw how that came in. Now the tick FL spiking in behind that. We saw that before. Of course, our underlying 10A5, and this is probably our last track here, so we'll just see what happens. The
shorter term point of resistance.
Volume EK, then it backed off. The tick FL, it backed off slightly, still holding the same level. 1's starting to turn up, and we may see that J attack cross underlying everything. the 10-5A.
Be interesting at the top of the hour how our 10-5ABC3 change or get stronger, weaken, which will determine what you do here, Darren, I'm sure.
Yeah. And I guess we're at the top of the hour. I'll get out of break even here.
10 still stayed strong, weakened.
Yeah.
But our smaller charts still look like they could push, and of course here,
and there it
goes.
I would have, apart from the top of the hour, I would have liked to have held that just because of the turning smaller charts at the bottom, volume tick.
New high of the morning, possibly breaking into that gap close. A lot of different components. Sorry to cut you off.
Nope. Well, I know there was a little bit of challenge at times to following some of that quick activity, especially if we got into some of the scalp level of things. But we did observe a lot of impacts of attack crosses, of 6-component scalps, of bigger setups that looked for sharp scalp component entries. Even at times in that bigger one, we had the tick FL, 3 of those internal components in that one column working. We've seen that also work with volume EK in terms of 2-tick very quick scalp lock-ins. So we've seen sort of an array of things today, some that we're able to chat about well ahead of time, some that just happened and unfortunately had to chat about it as it was going on, or even to some degree after the fact. I know, as I say, some of it may have been at times a little bit challenging, even a little bit frustrating, but I think there was a good handful, guys, of patterns and discussions that were able to be followed and observed as things walked along and as we described things. So at the end of it, we did just for tracking, had our 4 points early on, and then subsequent to that, we've had another 6.5 points crystallized by that 7-point trail there when everything kind of cascaded nicely together. So hopefully it was beneficial overall, educational. I just see one last comment here. How come those bigger moves only happen when you're in demo? It's actually funny. They do happen when you're live, but you have a different set of emotional parameters when you operate in demo versus operating in live. And that is the challenge, is to operate within the same emotional parameters, whether you're in demo or whether you're in live, making the same decisions, the same calculations, and just controlling those emotions. There was no wrong or right decision. At one point, Brandon was talking about wanting to exit at the 2-point level, and
2 or 3,
2 or 3, it was something like that. And we continued to just keep the lock in because we had already had established a track record for the day and had taken the 1-point sort of lock-in approach pretty much the bulk of the day. Wanted to see something that looked like it might be very nice for something in terms of a longer thing. But making the same decisions, whether you're demo or live, I think, guys, is really key. Not having different decision-making processes is very important. So.
And even just taking a point on that trade, if that's where your target is on the trade, you get the sweet spot. I'm sure it did move another 10 points after that. Here we are, we're pushing up now into the gap.
Yeah, and I just missed my entry there. Well, actually, it's coming back down to it.
Yeah, you don't want to chase it either.
No.
But anyway, it was a great morning here. Hopefully everyone learned and had learning components to the day. I'm always learning. At the end of everything, we always are looking for strong ergodics, strong angled ergodics, nice sine wave, nice angle on the biases, nice crisp, sharp attack crosses. And Darren, Brandon, Graydon, thank you for all your commentary today. Everyone's thoughts and viewpoints are good and valued, and it's been our goal since the very beginning to always teach people the patterns and the charts, so that, as we've often said, and we haven't said this much recently, but in the past, so that if people are on in the afternoon, they can recognize those patterns themselves and trade. as one becomes more proficient in that, more experienced in that, uh, being able to trade without arrows is a good skill to be able to learn, and we're being forced to do that in the last little while. We're seeing the opportunity still come in, not necessarily at times with the arrows. Sometimes the arrows are good and on time, sometimes they aren't. But we're just trying to fine-tune our trading experience, and can make it a little more challenging in that the pattern recognition becomes even stronger now. But I think it's good. I think it's good with the multiple components of the ergs, the biases, the attacks. And there's a lot of information here in the charts. In the past, we didn't have to utilize all of it. We were able to get a great track record in the beginning with just the 10 ergs, 5 ergs, A and B bias. And now we're starting to branch out into other aspects of the charts. And there's even patterns that I'm sure that we don't even talk about here that other people are seeing as well. Again, thank you everyone for being here today. Have a great day and safe trading. Bye.
Muted.